Good morning, ARMR insiders and YouTube audience. Welcome to the ARMR morning meeting. Please find your way into the conference room, the virtual conference room, that is, of the virtual hedge fund that we call the ARMR Report. Today's morning meeting is going to double as our weekend review. So welcome again, YouTube audience. I'm going to be off the desk tomorrow, so I thought I'd join ask you to join us today and share with you some thoughts on our week in review, what we think will be happening next week, and most importantly, what's going to happen at 8:30. It's a non-farm payroll number and how it affects our portfolios. So we started at 8:15. I wanted to get a couple things squared away before we see that non-farm payroll print and figure out how it affects our investing, if it affects it at all. Okay, so we'll go over those parameters. Let me just say a couple things real quick. What has been happening at FTX and Alameda and the crypto collapse that's continuing to unfold, and that, quite frankly, I think will get worse. If you're following the story, the fraud and Ponzi scheme behavior is so pervasive that it's forcing the entire community of crypto to question how business is executed. Okay, we can get to that on another day. But what I wanted to share with you right now is this is a classic example of confusing the smart money with really the arrogant money. And what I wanted to say to you today is you are the smart money. I'm the smart money. All of us around here on the virtual hedge fund desk are the smart money. Because what we do is we gather information from around the world. Let's be honest, the ARMR Report has subscribers in 35 countries around the world. And you know who they are? They're people just like you working real hard to fund equity portfolios and manage those assets on their own. And you guys, myself and you, we work in the real world. We work in the real world where it's not about connections or who we know or political donations. Okay? It's about gathering information in the real world to make real money and then invest that money to make it grow. So you've got information you don't even know you have. Maybe you do, but maybe you don't. That's the purpose of the virtual hedge fund. We all come together and share information. And that information makes us money because collectively we're the smart money. We're not the arrogant money. What's going on at FTX goes on constantly. And we saw it happen in Bernie Madoff, right? Oh, he made money every year. He's smart. Smart money. Look how great his performance is. Not smart money, Ponzi money. Arrogant money. How about long-term capital management? They're brilliant. MIT guys. Apparently MIT guys, and I don't mean all of you, and I don't mean any disrespect if you're on the show, okay? But MIT type guys that people treat like gods are arrogant guys. Arrogant money. They make money for a while and think they're infallible. They have no risk management rules. And then they get destroyed. No risk management rules. If you watch SBF in his interviews the last couple of days, his biggest mea culpa is, I blew it. I didn't manage my risk. I didn't understand the risk. Smart money, right? No, we're the smart money. That's what the virtual hedge fund desk is all about. It's why I started this process. So smart individual people in the real world running real money can work together, share information, and build net worth. All right. It's 8:20. We got 10 minutes before non-farm payroll. Let's take a quick look at the NFP and where we are today and what my thoughts are on both from an algorithmic standpoint and what the reaction to the news may or may not be and how I will be affected by it. Okay. So there's the S&P and there's different ways to look at this. This is a marked up chart of the S&P's bear market from 2022. Started in 21. There's the head and shoulders top breakdown. Okay. These yellow dashed lines are really, they're simply Fed action days. Okay. So during this period, okay, the market's been trading between the days when the Feds first started to raise rates and talk hawkish. So wild volatility, but as you can see, contained in the Fed rate hike range. So we've gone from the bottom of the range to the top of the range. We have risk monitor green here. So our index only portfolio has captured all of this move. We are on the cusp of another ARMR swing entry point for the S&P and the NASDAQ 100 if they were to follow through this week. Yesterday was, or 2 days ago when the Fed was speaking, was the much excited and breathless commentary about the breakout above the 200-day moving average. Well, breakouts above are great, but they have to stay above, and a weekly close is more important than the daily close. So we're really in no man's land in the market right now. Right up to this yellow line, make a lower high, reverse break back down. That's going to be a problem for the market and would suggest a move back to the bottom of the channel. Break out from here, and we may get more bullish. So what does that mean for our portfolios? Index only, which invests in the top 8 indexes that we follow, NASDAQ. Well, NASDAQ is out, but the S&P, the Dow, small caps, IBD 50, momentum, value, and treasuries, TLT. We're long TLT right off the bottom there, okay? That stays long. It's got about 12.5% cash in that portfolio. We go over to our swing strategy only for the S&P. We already booked our profit there, so that strategy is in cash right now, looking for the next entry. Our managed portfolios are carrying a lot of cash right now and are dedicated really almost exclusively to precious metals and cannabis. And I'm going to go over with you after the non-farm payroll prints, what are the similarities between cannabis and precious metals, and another group. I'm going to share with you another group, okay, that the month of December tends to be the accelerant. I'm going to go over that in a minute, but I don't want to get off topic here because we got 7 minutes before non-farm payroll. So let's talk about how we're going to handle that. First of all, I shared with you guys a hack on how we're trading volatility. I shared this with you on YouTube a few weeks ago. And so let's just, touch base again and make sure we're executing correctly. All right. So there's a terrible chart of VIX just straight down, right? Just keeps on selling off, markets up, VIX crush, new lows on the year on VIX. So in a year, so first of all, please understand what VIX is. It's never more obvious than this. In a year where we've had a terrible bear market with some wild volatility, you would think VIX would go up, and it doesn't because we don't really understand VIX, right? So you have to understand it. VIX is only going to skyrocket if something happens that people can't predict, that they don't see, right? So everybody saw the bear market coming, so VIX doesn't go anywhere. But for instance, you get some type of credit, collapse somewhere that people don't see coming, and it snowballs. I'm not saying this is going to be it, but this is an example. I saw a story yesterday on Blackstone, BX, and they're not allowing investors to take a REIT, okay? Now, just a one-off announcement. That's a terrible chart, and it looks like it's going to collapse in here, okay? That's a one-off story. If that story gains steam, if basic REITs don't allow people to take money out because they're insolvent, that's a problem, right? And if the market doesn't see that coming and that snowballs into a bunch of other investment managers seeing a lot of capital sucked out of their firm and they don't have the cash to meet the commitments, we're going to have another version of a financial crisis, right? I'm just spitballing. Boom. That's what would put VIX up. But without something like that out of left field, VIX isn't going anywhere. What we do when VIX gets crushed into the close, we literally buy it in the last 3 minutes of trading. Sometimes I buy it in the aftermarket in the next minute or two. Okay. And when I come in the morning, it's inevitably up. Not a lot. I'm not making a lot of money, but I sell it in the morning for a profit. Sometimes a nice big profit because the market gaps down, but most of the time just a little gain. The key here is that I have protection overnight from uncertainty and I get paid to hold it. It's a no-brainer. But I come in today and I don't hold the whole position as mission creep because I want to have something on into non-farm payroll. It's possible the non-farm payroll number is bigger than expected. Market craters and VIX pops. That's another trade. That's not the overnight trade. The overnight trade is I get paid to hold protection overnight for my portfolio, and I take most of that off. So I have a small position on VIX, which I would have 100% off already, but I kept a small position just in case there's a big non-farm payroll number. I doubt that's going to happen. But so let's say the number, let's go over non-farm payroll now in a couple minutes. What the expectation is, let me just look at my notes real quick. What do we got here? Non-farm payroll expectation, 200,000 is the non-farm payroll number we're looking for, down from 261 in October. And then, of course, we're looking at the jobless rate, expected to stay steady at 3.7, and labor participation to edge up to 62.3. So it's never just a headline. So you're going to get the print. Anything, if it's slightly above 200, it doesn't mean anything. You need, in order for me to trade, what would I do at 8:30? First of all, normally I do nothing. Okay. If the number comes in less than 200,000, I immediately get rid of. In fact, any normal number, I'll get rid of the rest of my VIX. I don't need it. Okay. And it'll get crushed. A number a lot bigger than expected. And I don't know exactly what a lot has to be. Is it 50,000? I don't know. We'll have to see what the reaction to the news is. If something's a lot bigger, I think the market goes down on that and it could get aggressive on the downside. So I would look to put shorts out, but not until around 9 o'clock. So I don't trade knee jerks, particularly not in the first couple of seconds, because sometimes you see the number, then you see follow-on numbers. And so for the first 15 minutes, there'll be insanity. We'll watch how it trades. And then there'll be a direction that forms around 9 o'clock. And you know, perhaps there'll be a trade to put on. I don't really see the market going up a lot today because 2 days ago, Powell kind of sucked that juice out of the market. So if non-farm payroll is weaker than expected, the market could rally on that. But I'll be surprised if it has a real, explosion, unless the number comes in horrible. If we get a non-farm payroll at, 100,000 or, some crazy bad number, maybe the market will skyrocket on that and we'll have a great close to the week. The swing strategies will go positive and we'll be adding stocks throughout the day. But I won't add them on a knee-jerk explosion. The market skyrockets on news. I won't touch it. And what we'll do is look to buy weakness during the day back to the volume-weighted average price of the VWAP. All right, so here we go. So, I think the risk obviously is to the downside because everybody's expecting the number to probably be in line, maybe a little bit weaker. I think people think it'll be weaker. So I think that the danger is a bigger print and the market unwinds a lot of the rip higher based on the speech 2 days ago. The market's up 4% off the lows on the NASDAQ 100, and the Treasuries exploded higher because of the word could. Right? Fed said they could slow the pace. So if the number's a lot weaker, people expect them to slow the pace. If it's a lot stronger, that word could is going to come into question and the risk is to the downside, I think. So let's see what the number is. But the key right now is, there it is. Big down move in the market off of the number. And the VIX positions just popped up a little bit. All right, what's the number, guys? I'm still looking. I'm a little bit delayed here. Here it is. Non-farm payroll. Ooh, Wow, 263. Okay, so the market's going to get, knocked around on that news. My VIX position just popped up, so I got a bit of a more of a gain there on the VIX position. So that number is 263. That's a big number. All right. Average hourly, November average hourly earnings 0.6 versus 0.3. So not private payrolls 220 were okay. So this is a big number. The market's going to get wrecked on that. This means the dollar is going to go up. Precious metals will go back down. Treasuries are going to go down. Average hourly work week 34.4 versus 34.5 estimates. So that's kind of in line. And the unemployment rate is 3.7, which everyone expected. So the top line number of what was that number? 263 is a much bigger than expected number. And I was saying to you, maybe 250 or greater would wreck the market. So now I think the market's going to really get thumped. And that's the risk in the market. So do I turn around and short as the market's plummeting? I don't do that in the first minute of trading. But that if I was ever to do it, it would be on that number. That number looks, so what's happening now is I don't think VIX is the way to play it. I almost want to dump my VIX right here and book the rest of that gain, because the real way to trade this is to get short. Sometime between now and 9 o'clock, the market's going to knee jerk down. Does it rally up, put out that short, market goes lower. Short GDX is a hedge. That would be, certainly a way to do it, or dust. You can get long DUST if you're long precious metal stocks. Okay, so this is, the inverse, 3 times inverse of the gold mining stocks. Okay, so that would be a way to get some protection. So we really want to see. I don't like to make a move at 832. The number's a lot hotter. Knee-jerk reaction. How does the market respond from there? But I do think that this number now is going to bring into question the word could. That entire rally didn't make a lot of sense. The NASDAQ went up 4% because Powell on Wednesday said we could slow rate hikes. So now we get a number like this, and people are going to say, well, he didn't say they would slow rate hikes. And so what may have been 50 basis points before is probably going to be 75 basis points in December. So the market's going to challenge that huge up day. Okay, and what I'll be looking to do, and I'm going to pull up, I'm going to stick with my VIX position for now. So we have in our portfolio, precious metals. Our managed portfolio has a lot of cash in it. Okay. So we have a lot of cash. We have VIX in our managed portfolio. I don't have to do anything immediately. But what I will look to do after the initial insanity of the knee-jerk works its way through is I'll look to perhaps hedge some of my precious metals by owning dust. I think that would be a good way to do it. Dust is trading, 1458, 1468. So you're not getting a lot of prices that make sense right now. So buying something at 834 or shorting at 834, I think is a mistake. I usually don't put those trades out maybe until 9 o'clock, closer to 9:30. So, so this is going to be very interesting. Now let's go look at the NASDAQ. We were this close to the ARMR algos getting more bullish. They almost went bullish yesterday and they just didn't fire. And so we said, okay, well, that window to get more bullish is to yesterday or today. So obviously if the market implodes today, it's going to continue to hold a lot of cash. This rally right here in the NASDAQ, okay, which is a 4% move based on the Fed saying they could do something, which now apparently they probably will not do, my guess is going to be challenged and possibly reversed. So let's go over what the risk monitor says at this stage. How are we going to manage portfolios from here based on how the market closes today? All right. The entry point was here on our long portfolio. So our index only is 87.5% invested. Okay. So it's got a little bit of cash. Mostly it's invested. From here, rallied up to here. The stop is now the low of that big up day. So the market comes back below that price and we'll raise cash in our index only portfolio and the risk monitor will go red. If we stay above that level, even with a strong jobs number, then I think that would be very bullish. So until we get to the end of the day and see how this shakes out, I think it's best to step aside, watch the behavior. Market craters at the open, holds the lows, reverses and starts to go higher. And what you'll have actually is a very bullish setup. So the end of the day today is going to be key, and how it trades during the day will affect our portfolios. What we usually do, and what we'll do in this case, let the market open, let it trade. There'll be a consolidation. We'll find buy stops and sell stops above and below the indexes. And we'll just put them out into the market. And we're going to get filled one way or the other. We may be short the rest of the day, and we'll be making money short as we're exiting. Our index-only portfolios exited, and we go to cash over there, and we go risk monitor red. We'll have some short positions on in our managed portfolio, right? Or the market will hold at key levels, start to rise, and we'll use this weakness in the market to get long some of the indexes. That's how we're going to trade today. So let's move over to precious metals now. We're going to let this hysteria trade. And I'm going to talk to you real quick about the two groups that we're focused on. All right. We have in our managed portfolios, we're long cannabis and we're long precious metals. And we'll look at silver first. I want you to look, if you will, at the similarities between the chart patterns. So let's just look at price action first. So what I promised you is there's a similarity between precious metals and cannabis and a third group that I'm going to reveal right now. And that group are innovative stocks. Cannabis, precious metals, innovative stocks. What do they have in common? They don't seem like they have anything in common. What they have in common is they've been wrecked all year, and quite frankly, going back to February 2021. And in my 30 plus years experience running money, what I've seen in a market that allows it. So that's the caveat. If this market implodes in December, this conversation is moot. Okay. Now, having said that, what I've seen is that in the month of December, the groups that have been suppressed the most can have wicked snapback rallies once this tax loss selling is over. And you never know when's it going to be over. Okay. You don't know. You look at price action, you look at bottoms that form. Sometimes it's over in November, which I think it is in precious metals, and it starts to come off the lows. Okay. Or there's an event that takes place like cannabis that sets the bottom and it starts to melt up off the lows. So in a bullish environment, in a good environment, if the market's having a decent December, you're going to see these beat up groups rip higher. You can. The right names will rip higher. So you can't go buy any innovative stock because some of them are not doing well and those stocks go lower. But some of our favorite innovator names, I'll give you an example. Like Trade Desk. They just keep knocking down the numbers quarter after quarter. Better than expected, over and over again. All right. Putting up a perfect double bottom in here. This breaks the downtrend. It could melt up in December and it usually spills over into January. So this is just price action I'm talking about, and 30 plus years of doing this. When I see the consolidation set up in the October, November timeframe, and they start to break out in December, it can turn out to be lots of fun. So let's go over each group. Let's talk first about silver and gold, because I want to tie this back into what's happening in crypto. I'm going to tie this back, and then we'll get on the Cannabis Couch real quick. And if you have any questions, I'll answer them. Okay. All right. Are you following the FTX story? Are you following the SBF Alameda implosion? I'm not a crypto guy. You guys know this who follow me for the last 3-4 years. I'm not a person who is traditional finance and thinks that there's no place for crypto or blockchain. I love blockchain. I think it makes a lot of sense. I could see it being a valuable process as we move forward in the financial world. I think that there will be digital assets. So I'm not an ostrich with my head in the sand. But at the same time, when Bitcoin goes from 10,000 to 60,000 and a bunch of what they call shit coins go through the roof, I shared with you as often as I could that that's classic sign of the madness of crowds, that it was an aberration, that it's incredibly dangerous, that you have to manage risk, that if you're making money in a Ponzi scheme, at least you understand you're in a Ponzi scheme and you make sure you're not the one holding the bag. Okay. I'm going to lay it out for you right now. So the reason I keep following this FTX story as closely as I am, well, I find it fascinating, but also it has tentacles, right? It's a virus that's infecting other sectors of the market. And if that infection gets bad enough, okay, I am concerned about the financial markets. So it's always in the back of my mind. And I want to see what's happening and how does it affect other things? What are the pieces that we're going to put together? So in case you're following the story and you're confused, I just wanted to break it down for you in one simple explanation and then tie it back to precious metals. What went on at FTX? Forget about all the noise. This is very simple to understand what went on at FTX. FTX set up a fractional reserve system, a fractional reserve banking system. That's what they did. Does that sound familiar? It should, because that's what happens on a massive scale with gold and silver and central banks. They suppress the price of the metal through fractional reserve strategies. They rehypothecate and rehypothecate and rehypothecate a gold bar. It may be sold 4 or 5 times. It's not really there, but it keeps getting sold, right? It's in one place and it keeps getting sold. Precious metals investors have been complaining about this, till we have no voice anymore. We can't. We're hoarse. The cows are never going to come home. Okay? Because governments want to suppress price until they don't. So I'm not going to go through the whole precious metal story right now. Basel III is in effect by the end of this year. And we think we're at that moment going into 2023 where it becomes beneficial for central banks and governments for the price of gold to go up. But that's for a whole nother conversation. Let's stay focused on FTX. FTX was an exchange that was connected to a hedge fund called Alameda. They like to call it Alameda Research. It's a hedge fund primarily owned by SBF. So it's his personal hedge fund and a couple of friends. and it was connected to an exchange. And they funneled client money from the exchange over to the hedge fund to fill holes in their balance sheet. But that was the end game. That was when things were already gone. What's more disturbing is the fractional system that went on between Alameda and FTX. And what I mean by that is an individual who opened an account at FTX and wanted to buy one Bitcoin. So they deposited $20,000. They deposited it. Originally, they had to deposit it. Listen to this. This is crazy. They deposited it into the hedge fund, who supposedly turned around and sent the money to FTX, to the client's account. And the reason they did that, this is in 2019 and before then, up to 2019, it's because they couldn't get a bank account at FTX because they were working in digital currency and no traditional bank would give them an account. So to get around the regulations, people sent money to a hedge fund, which was SBF's own vehicle, and he supposedly sent their money over to their account at FTX. Well, obviously what we see now is they did not send money. They kept the Bitcoin here, okay? And they pretended they had a ledger that showed the client, you have one Bitcoin in your account. But the Bitcoin was a fractional Bitcoin. It was a fractional reserve system. The Bitcoin was held here, and they pretended that it was over here. So when this went bankrupt, this company was broke, right? So when people tried to get their money off of the exchange, there was none. That's the thing that's going on. It's not that it just miraculously disappeared, blah, blah, blah. It's deeper than that. It's more nefarious than that. It's not just one actor who hacked the system and stole. That's the key. It's that the whole system was set up in a fractional way. One Bitcoin was held here, and they pretended it was over here, and it wasn't. So when someone tried to take their Bitcoin out of the exchange, and Alameda was already bust, and they didn't even have the Bitcoin anymore, they wouldn't give it, or it's hidden somewhere else, this person realized, I don't have anything but a piece of paper or a computer screen that tells me I have something. It's gone. It's not there. This is true about gold and silver. It's a fractional reserve system in many ways. If everybody came to the table and said, I want my physical gold right now, deliver it, they wouldn't be able to get it. And the price would go through the roof because there's a lot less bars than have been sold. So I find it very interesting that gold and silver are starting to go up now. Do I think it's because the fraud of fractional reserve is under the glaring light of the interrogator right now? Not really, not really. But is it possible that even to a small degree, the fractional nature of gold and silver begins to be reduced, right? I'm not naive, and I'm going to think that the fractional reserve system that's been involved in gold and silver for decades is going to change overnight. But how about just on the margins? How about just a little bit? How about just, and this is why I keep following the FTX story, how does it affect other indexes, other markets, other worlds that we're looking at, other investment assets? Is there even a small amount of the investing community that looks at what happened to Bitcoin and really FTX and says, you know what? I'd like delivery of my gold, please. I'd like my silver bars, please. Just a small fraction begins to ask for that. And does it help drive prices higher? I don't know. This is a conversation I'm just throwing out there. Then I look at what happened to BX, right? Blackstone all of a sudden can't give money back to REIT owners. People who own REITs at Blackstone can't get their money out. I don't even understand that story. I mean, I understand the mechanics of it. I don't understand how Blackstone got in that situation. So in a world where people are starting to want their money back, want proof that their asset is real, what does that do to the precious metal sector? I'm just saying, fuel for the fire. There's a whole bunch of other reasons why precious metals are going up, but that could be fuel for the fire. And what we're seeing is a beautiful run off the lows in precious metals. Forget about today's weakness. Doesn't matter. Okay. That's an opportunity to add to the position. That's just day trading shenanigans based on economic numbers. Okay. This is the bottom in silver. We own it down here. It blew out. We're already making money. It's not about buying it as it's breaking out. You have to buy it in the base. You have to buy weakness. And that's what we've done at the ARMR Report. So we've already have our positions on. We had a huge day yesterday because of it. We'll see what happens today. But there's your gold position. And I'm just saying to you, and the reason why I keep harping on what's going on in FTX is to understand what it means for the entire investing community. As it's revealed that FTX is what was a fractional fraud, and we start to see things like Blackstone not giving money back on a REIT investment, all of a sudden a hard asset that you can touch and you want to see becomes very valuable. And price action is showing us that that's starting to happen. So let's switch over real quick to the Cannabis Couch, and I'll take some questions before we got to split and get ready for our live trading session. Take a look at and you can, if you guys have any questions, you want to fill it out in the comment section right now. I'm happy to go over them in a minute. But real quick, so precious metals, cannabis, innovative stocks, all beat up, all coming off of big bases, been basing for the last couple of months, all starting to move. So as long as the market doesn't totally implode in here, those are the places I want to put money in December and into January. Cannabis has been exhibiting. This is the only comment I have about cannabis right now. And if you have any questions, I'll get to them. Cannabis is exhibiting, based on price action, the exact opposite behavior that we saw for a couple of years, which is to say, particularly in MSOS, you would get weakness in the last half hour almost every day during the bear market. But ever since the Biden administration asked Merrick Garland, the DOJ, to come up with a new schedule or a recommendation for a change, that was that big up day right here. Okay. If you're watching how MSOS trades, it's almost the exact opposite now. So this was the big day announcement, very exciting. Market, the stock was up like 30-40%, comes back to test, holds at a higher level, and now it's in an uptrend. And if you watch how it trades in the last half hour, what you're getting is big spikes up in the last half hour that, people are like, what's happening? What's happening? There's no news. There's not going to be any news. It's just like there used to be big spikes down in the last half hour during the downtrend. And I get the same question. What was the news? Why is it spiking down? I think I'm just going to throw my hat in the ring here and tell you that with MSOS in particular, don't forget this is a derivative. It's an agreement between Advisor Shares and Cowen and Company, their counterparty, and there might be other counterparties, but Cowen and Company is their biggest. And the referee is Bank of New York Mellon. And at the end of every day, Cowen, by the way, does not have to own shares. They have to transfer dollars on that ledger over to Advisor Shares at the end of each day, depending on the portfolio value as determined by price and audited, audited, I think is the right word, by Bank of New York Mellon. So they say, okay, this is the value. And Cowen has to transfer money to match it on the up days. It's possible Cowen does not own the stocks. So I think what their risk manager does at the end of every day is say, well, we better own a little bit more of the stocks and we're going to transfer cash. You see what I'm saying? Like there's a management there. And I think that system was gamed on the way down. I don't know this for a fact, but I'm just telling you the way it traded, okay? There was a natural arbitrage on the way down based on outflows, the need to carry stocks. And so you would see naked short selling on the CSE on the way down. And what I'm saying now is that's been flipped on its head. And in the last half hour, I think risk managers of counterparties are looking at their book and they're saying, we have to cover some of those naked shorts, or we have to add some real positions to our portfolio to keep it in balance. And that's why you get these spikes in the afternoon. They're probably trying to accumulate all day. That's why we're in an uptrend. That's what an uptrend is. It's accumulation, right? So they're accumulating all day. And then when they haven't gotten to their price, they just say, okay, hit it. We got to own X amount by the close, bang, and they do it. Then it opens up the next day down a couple percent, and they start trying to buy on weakness again. And if they can't buy it on weakness, boom, they hit it in the last half hour. Don't forget also, we went over this a couple months ago. There is massive naked short selling of U.S. cannabis companies on the CSE, so much so that the governing body up there in Canada put out that report saying, CSE, you got to stop this naked short selling. Remember that? There's an investigation going on. We have to stop the naked short selling. So you have all the time in the world to stop naked short selling when the U.S. keeps fumbling the football and no one's going to get it right. Nobody really cares. You better fix the naked short selling before the DOJ comes out with a recommendation to deschedule cannabis. You see what I'm saying? This is what creates the uptrend. And then when you get spikes in the last half hour, it's because probably somebody who's got a short book has decided that book is too big and they've got to cover. And you get those pops. So anyway, those are my thoughts on what's going on in cannabis. I love the cannabis story. We bought it cheap. We're not chasing it here. You don't want to, add on big up days. You want to have your position size on, leave it alone. There'll be an announcement, whatever it is. There'll be a spike of some degree, then probably weakness because it'll hit overhead supply. There'll probably be secondary offerings as these companies are all starved for cash. So they'll use the pop to raise cash. And there'll be time enough for us to get more exposure once we know what the playing field is. So have a position on to make some money down here and enjoy the pop, but don't get over your skis. That's my thought on cannabis. All right. Any questions you guys have? And then I got to split. And of course, any of you who are watching this tomorrow, because usually we do this on Saturday, feel free to put your questions here in the comment section. And when I get back on the desk, I'll go through your questions and I'll answer them via the YouTube channel. So feel free to ask any questions you've got after you've watched the video in the comment section, and I'll share it with you. If you'd like to be an ARMR insider, right there, armorreport.com, ARMRreport.com, and you could become part of the real smart money. Individuals with real jobs, real economic experience in the real world, running real money that they worked real hard to create. That's what this virtual hedge fund is. And we share all that information together and make ourselves better when it comes to managing capital and increasing net worth. So I think what we're going to do here, a lot of ARMR insiders are sharing some thoughts in the Slack room, and I think what we're going to do is take those thoughts into our live trading desk. It starts at 9:25 and we go all day to the close. So we'll go through those stocks, guys. You're mentioning some ideas for us to trade and invest in and look at. and we'll go over that at 9:25. Everybody else, have a great weekend. Thanks for joining, and have a good trading session. At the close, as I walk away here, at the close of this conversation, the markets are trading at about the range they were at when the news first hit. So NASDAQ down 2%, S&P down 1.5%. So nothing's really changed from that knee-jerk reaction. Now it's 9 o'clock, and we'll see, if we want to put out any positions between now and 9:30. But I don't think so. I think what I'll be doing is watching the first half hour of trading, looking for our locations, and putting our buy or sell stops out and trading it from there. I think that's what the reaction will be for myself on my trading desk. Have a great weekend, everybody. Take care.